mortgage.
Thank you.
Good evening, I'm Howard Bowes, and I'm from Harvey Bowes Mortgage and Finance Brokers. Importantly for us, everyone that gives advice on mortgages in Harvey Bowes is also a property investor, so we speak very much the language of the investor. Just going to go through a quick update this evening. I'm going to talk to you on two different points, one of which is just to have a look at the market and give you an idea of the hunger in the market at the moment, and the other one is just to look specifically at a product that might help you open some opportunities for those investors that have got a portfolio that they think is quite stagnant at the moment. So we'll look at these two different areas. So the first one is just these key points here. What hunger is there in the market? Well, not everyone realises that there are 14 new banks that have been approved since 2013. That's a significant amount, isn't it? Of people that are in the banking sector in the UK. There's a huge amount of hunger for that, whether it be the Bank of Ireland or Metro Bank as a high street bank. And then you've also got some of the commercial lenders that have also gone into banking so that they can expand their commercial mortgage portfolios. People like Paragon, who are now a licensed bank. But what I also thought was interesting is there's a further 20 that are waiting approval at the moment. It really shows you how that's ramped up significantly. And so, you know, when the press report to us that HSBC might be moving their headquarters and they're making these redundancies, well, yes, they might be re-strategizing the way that they do things, but this demonstrates the hunger that's in the marketplace here in the UK. The last point you'll notice there is that 36% of mortgages are on the lender's standard variable rate. Now, whether that's buy-to-let mortgages or whether it's residential mortgages, it means that 36%, more than a third of the mortgages, are on the lender's normal rate that they charge. So not a deal rate, not a fixed rate or a tracker rate. And that, quite frankly, means that our landlords are paying too much for those mortgages. Why pay the Mortgage Works TMW 4.99% or something like Kent Reliance, whose standard variable rate is 5.99%, when you could get a 3.15% by switching to a new lender? And what's interesting, and the reason why that last point is there, it does link very much to the previous points. And that's because, you know, the lenders have demonstrated a huge hunger in the marketplace, but there are some landlords and investors out there that are asleep. They don't realise that these opportunities are available to them because they're still thinking of the mindset of what happened a few years ago. So be rest assured there are lenders with great deals out there that would move you away from the standard variable rate, that also will treat you as professional landlords, have no minimum income requirements, etc., and will take a flexible view of lending to landlords and professional developers. This just brings me on then to my next point, and that's Castle Trust. Who here has heard of Castle Trust as a lender? Okay, so a few people have heard of Castle Trust. Very, very interesting product that they've got, which is unique in the UK marketplace. So I'm just going to go through this with you. So basically, what it says here, you know, sack of money, it's an equity loan that they offer on your buy-to-let property. The way they do it is by taking a charge on the property, normally a second charge if you've already got a mortgage, so a second loan, okay? But what's interesting is, as the clipboard indicates here, that's their symbol for it, they don't have any income ratio for against the rental, okay? And that's great in an area like this. If you invest in an area where the land values are high, but the yields are therefore comparatively low, unlike where I come from in Wales, which is the exact opposite, then what you'll find is that having these equity loans is absolutely fantastic because there's no stress test. So as long as you meet the stress test of your first mortgage on that property, they will advance you further funds afterwards without a stress test. What they'll also do is not have any monthly payments. So no monthly payments affecting your cash flow either. The reason for that is because they're going to share the equity with you. You're going to still control the equity, but they're going to share the equity with you. So if you redeem this mortgage in 5 years' time, they will look at how much it was worth today when you took the loan out, how much it's worth in 5 years' time, and you will share some of that equity with them. And you control how much you share by controlling how much you borrow. So just to make this point, let's say your property looks like this, you've got a mortgage on it, perhaps less than 50% loan to value, and you've got a large chunk of equity. What you do now is you still keep the top end of the equity, but you share some of that equity with Castle Trust as a lender. By doing that, you raise those extra funds, which you can go on to invest elsewhere. we've had people talk to us, some of the investors we've shown this to, talk to us about Castle Trust therefore being really part of their power team. It's almost like having a business partner, because they're not taking a monthly payment. Exactly. And so what you can do is share part of your equity. You control how much you share with them, turn that equity into cash to make further investments, which I think is a very strong proposal for particularly areas like this where land values are high. No monthly payments, no rental stress test. So I hope you found that interesting this evening. As a quick update on some of the products available. Myself and my colleague Simon and Mark will all be here under the banner at the end of the meeting and in the break if you want to ask us any further questions. Thanks very much.
Excellent. Make Howard and Simon work tonight because they're here. They know what they're doing in the mortgage market, and it's good to have them here showing us what's available. Wouldn't you agree? So especially, you know, the lenders are coming in almost every day, every week, the new products, and that's why we've got them here. So, you know, if you think, oh, I can't get it just straight 25% deposit all the time, go and have a chat. Is Kent Reliance still doing 85%?
They are, yeah.
So, you know, 85% buy-to-let mortgages, etc. Go and have a chat with them and really make them work hard. Excellent. Okay, so